Happy Monday, everybody. I hope everybody had a great weekend. Today is Monday, December 6, 2021, and this is your Monday market update video. So I don't know about you. Did you get a little seasick last week with all the ups and downs in the market? What we really need today is a yo-yo to really show you what actually happened last week. We're going to talk about it a little bit this way. So I'll go day by day as usual, but suffice it to say, remember the boat analogy I used last week. Everyone on one side of the boat and it's becoming unstable. Well, it seems that as starting the day after Thanksgiving and so far every day since, everyone is still on one side of the boat, but then they run to the other side and everyone goes to the other side of the boat. And then they run back to the other side and to the other side of the boat. So let's hope we can keep the ship from capsizing, but that's still happening every day. So let's start briefly with the week before last, Thanksgiving week, the one where we hoped it would be quiet. Well, as last Monday's video talked about, it was all but that. The Friday after Thanksgiving, the S&P 500 and pretty much every other major asset class was down. Dow, NASDAQ, Russell 2000, crypto, and even oil. So this past Monday, we started the back and forth on the deck of the ship. Monday was to the upside. Stocks were in recovery mode. Fears from the Omicron variant were starting to ease, and we started to get some data on it. More contagious, but less severe and deadly. At least that's what we started to see on Sunday night. Monday morning reports were still the same. President Biden all but took lockdowns off the table. Still early, but not too early to act as the market does. We closed off the highs for the day, but the S&P 500 was up 1.33% for the day. So Tuesday, everyone ran to the other side of the boat, the downside. The Moderna CEO came out overnight, reported that some of the scientists that he's talking to say that the vaccine may be less effective on Omicron. But the CEO of BioNTech, the Pfizer partner, said that they think vaccines will still provide high levels of protection. So the risk off looked like it was still sticking with the negative side. So we saw that for the rest of the day. Then Fed Chair Jay Powell was testifying, and whoa, did he make waves? Speaking of the analogy, he not only said that a case could be made for speeding up the tapering, which is something we've been worrying about as a market for the last couple of weeks. But he also seemed to admit that inflation will not be transitory, at least not by the definition that most people have been using for transitory. Overall, the S&P 500 was down just under 2% for the day. The end of the month of November ended with a thud. Quick note, if the Fed speeds up the taper and ends up setting up for rate increases, and the economy is losing momentum, this could be the policy mistake that the market's been watching for and that we've been talking about and that we've been fearing. I'm not sure that we'll see that, but that would look like the late 1970s. The Fed raised rates and all but killed the economy to keep inflation under control. We'll be watching, we'll be talking about it here, so stay tuned. Inflation and the Fed policy errors are really the key risk to this market right now, not even COVID. As you have heard me say before, in most cases, market rallies don't die of old age and they don't die of valuation. The Federal Reserve usually kills them. So we'll just have to see how that goes. Wednesday, back to the other side of the boat. Good economic data like the ADP jobs data. We're still waiting to hear the tandem reports to come in. And we also saw the ISM manufacturing were very strong again. So stocks were being bought early. But after some technical work, they did roll over with more Powell and more Yellen conversations. And the real kicker, why did the market sell off? Well, as Gomer Pyle would say, surprise, surprise. I don't know why. Everyone was surprised that we found Omicron in the United States, but between that and the Fed speak, that took the market back down. The Fed did speak about passable stagflation. We've talked about that here a little bit. They didn't use that word, but that's basically what they were talking about. Everyone ran for the other side of the boat. The S&P 500 finished down 1% for the day after being up close to 2% early. Head fake? We'll just have to see. Thursday, you guessed it, run to the other side of the boat again. Omicron worries eased again. Weekly jobless claims were good. That's the high-frequency data that we keep getting. Then optimism about Congress reaching a funding deal and raising the debt ceiling, thus avoiding a government shutdown. A bit of back and forth with Omicron cases, right? We saw new cases in Minnesota and New York City also. Mild symptoms, recovered patients. Selling was short-lived, though. People stayed on the other side of the boat. The S&P 500 finished up almost 1.5% on the day. A bit of caution into the close as the job numbers that were due out on Friday morning seemed to be the most important news in the room, so the market waited, and what a shock they'd get. Friday morning came, and seemingly the all-important jobs number hit about half of what they were expecting. The economists and the media fell all over themselves, saying how this collection of data was flawed for this reason or for that reason. Now, this drives me nuts, but suffice it to say, no one believes that the job market is bad as that number came out as. So they'll spend the next few months, it's at least the next month, explaining this thing away until revisions next month. The research was already out over the weekend saying about how this headline was the only bad part. Underneath the hood, everything looked good. So we'll just have to see how it goes. For the day, the S&P 500 was down just under 1%. The Dow Jones Industrial Average was down slightly, and the NASDAQ, which was hit the hardest, was down almost 2% again. Bond yields were back down into the 135 to 140 range, and oil had its sixth week of declines. Over the weekend, we even saw a big move down in crypto. For the week, S&P 500 down 1.2%. Dow was down just under 1%, and the NASDAQ was down over 2.5%. Overall, a pretty ugly week. So we'll see how this goes. This coming week will be slower for data, as it typically is following a jobs week. There are a bunch of companies releasing earnings. We've heard from most of the market-moving companies. We will get Costco and Oracle, a couple of the big ones this week. Not too many other big ones will be coming out. We will get JOLTS Wednesday. That's the reading on the job openings, and the Michigan Sentiment and CPI on Friday. Remember, that CPI number is one of the ways that the Fed measures inflation. That is going to be the big one on everyone's radar. So, as I mentioned, Friday, there was a tug-of-war last week for the headlines. We started the week following Omicron and all the different pronunciations of it. But not to be outdone, Jay Powell tried to take the spotlight back, bringing some new language to his reports on Capitol Hill. And Janet Yellen was at it too. And yes, if you had a few Fed board members out there getting their names in the headlines as well and their quotes as well. Congress tried to get ahead, keeping the government open for now at least. Even a late Friday agreement to raise the debt ceiling was thrown in. Note that this comes back again in February, that pesky debt ceiling. Not to be outdone, the president even took some time to try to calm us down about COVID, and all that didn't even include the Cuomo brothers on TV, anything in sports, or even the 20th anniversary of the Enron bankruptcy. So needless to say, there was plenty going on last week, a lot to watch this week. Remember, we seem to see that the biggest risk is that Omicron brings the lockdowns. And here in the U.S., we seem committed not to go that route, so we'll have to see what the global markets look like. We'll watch the Fed and the possible policy mistake that we've been really worried about and that we've been talking about, and we'll keep you informed as things develop in that way. This, I think, is the key to the markets. COVID is not going to save the market this time with positive news. But the Fed is going to stay in focus. Keep that in mind. For now, we're wrapping up our year-end positioning, and that keeps changing, and it is different for everybody. So please call me. Let's have this discussion. There'll be another near the end of the year planning video on Friday, so please check that out. For now, have a great week. Stay safe and stay healthy.